Time for calls of the day. It's Nike. And I've got to tell you, Jimmy, the last 2 weeks, there's been a flood of positive news from the analyst community around Nike. Now, this is the time, put Nike up, drop Lulu off these best ideas list. Not throwing shade at Lulu at all. It was just like, look, Nike is poised to have a better upside, at least in the near term. Best idea, Barclays today, target 119. Upgraded to buy over at Citi from hold. 135 is the price target there. You bought it, I don't know, 6 weeks ago? 8 weeks ago, something like that? It's fairly recent.
Yeah, after the last earnings report at 94. And you'll remember, and everyone will remember, that this stock was in a major downtrend when that happened. They had a good quarter. And that good quarter was what I was looking for to get in. Now, I've got to point out the stock's up 25% in 3 months. And it's now trading at around 31 times this year's earnings. The year ends May 31st.
Is that too expensive?
Yeah, I do think it's. I'm walking up to the line of scrimmage, Coach, and I'm looking at the defense, and I'm calling an audible here. And I think it's getting a little expensive. Now, the momentum is there, right? And the sentiment, as you were just talking about, is tremendously positive. So I'm going to let this run. I'm not going to get in its way. But I'm going to tell you, it's looking a little like the air is thin up here.
I don't know. I mean, Joe looks at quality and momentum all the time. And if there's a trend that looks like it's got some momentum behind it, it's not necessarily ready to stop anytime soon. How do you look at this? Because you don't have it in the Joe T anymore.
So it's different. Look, first of all,
this screams add me, Joe.
Let's be clear. Nike, without question, quality name, scores highly on all the fundamental metrics. The type of momentum that you're speaking about needs to be sustained over a multi-month period. And that's, in fact, what Nike did at the beginning of 2023. Now, it was a false start.
Multi-month. It's up 22.5% in 3 months.
Hold on. It was a false start for us because we added it at the end of April and then quickly had to move to the sidelines to mitigate the loss in it because you saw the decline into the fall. You need a little bit of a longer period than the last 7 weeks, which is really what Nike has been rallying off of.
You got some time before the rebalance.
You've got some time before the rebalance in January.
Next week, guys.
Well, you've got earnings next week. But I think what's so critical in all these reports, and Stephen Weiss did a good job talking about this on Friday, is where are you on the China recovery? Because the China recovery is part of the equation that gets you to believe that Nike can finally stabilize and move higher from the 120 level.
I don't think anybody in the stock right now is really counting on China to all of a sudden go gangbusters. I think what you're really,
a lot of the notes.
I know, but I think what people like me are really looking at is the strength in North America. Inventories getting under control, pricing getting under control. And, oh, by the way, people like me are looking at this and saying, do you really want to take a gain this late in the year? Now, having said all that, I'm not sure, Judge, that I want to walk in next week and see what the earnings report looks like. Why do I have to do that at 31 times earnings? Maybe I don't have to, okay? So I'm walking up to the line of scrimmage. I'm calling an audible. The ball's going to be snapped in the next few days. We'll talk.
Okay. Hopefully you don't get sacked. Occidental, do you want to comment? Joe, you want to comment on Oxy? Because it was upgraded today at Morgan Stanley, $68 is where the price target was. It's where it stays. Now they do a deal today for Crown Rock for $12 billion.
It's the Permian Basin, and it's this continued effort on the part of energy companies who are utilizing the earnings growth over the last 24 months and the strength of their balance sheets to ensure that they acquire assets in the Permian because there's the scarcity surrounding supply. This is obviously a deal that falls after Exxon with Pioneer and Chevron with Hess. Berkshire owning 25% of Occidental. Obviously, they were fully aware. There's reports of planes going back and forth to Omaha at the end of November. This was somewhat anticipated. So this is what these companies should be doing. What does it mean in terms of the future direction of the stock price? I think it is, unfortunately, not going to be able to overcome the supply to demand imbalance right now, which has supply at a much more enriched level.
Let me ask you this question.
Supply is overwhelming demand right now, and I think,
forget all of that. Forget all of that.
Forget everything I just said?
How much, yeah, for a minute.
Okay.
How much of the stock price is simply anchored in the fact that Berkshire owns such a large piece of the stock?
That's a great question. I would say how much?
No matter what you think of the fundamental story,
yeah,
the fact that Berkshire's been repeatedly buying shares.
Such a good question. I think it's probably, when you study energy companies and you look at Occidental, it's the #1 reason why you own Occidental above everything else, is the ownership.
Because Berkshire's there?
Yes. It's almost a stamp of approval. Yes.
In other words, the fundamentals don't matter as much.
Because I could find other companies where I might feel a little bit better than owning Occidental, but there's something about the fact that they are there in Occidental that makes it appealing.
All right.